Good morning, everybody. It's Wednesday, September 11th, 5:25 a.m. Central Time. Grain markets are higher this morning. December corn futures up 2 3/4 at 407. November soybeans up 9 at 10.06 1/4. They were below $10 yesterday and again overnight briefly. December Chicago wheat up 4.5 at 578 3/4. December Kansas City wheat up 3.5 at 587.5. December spring wheat is up 5 at 615. Let's start off with the sustainable food story.
Despite food producers being pressured to reduce their environmental impact, consumers aren't willing to pay a premium for sustainable food options. According to the CEO of JBS, productivity needs to increase so food can be made more accessible and food costs can be lowered. The CEO believes the food industry needs at least $350 billion annually until 2030 to fund the implementation of more sustainable practices. He also stated that a system needs to be put in place so farmers can be compensated for using higher environmental standards.
The concept of the consumer being willing to pay for sustainable food is laughable. Food prices are record high. This is a chart, if you guys are watching, United States CPI Food Index. And this index, and this is the government data, would indicate that the food index, that the basket of groceries essentially that Americans buy, is up 26% since February of 2020, which would be your last COVID month. And that's the government number. So a lot of you guys would say the government's full of it, and really it's 35%. I wouldn't argue with you if that's your case. Why are food prices record high? It all goes back to COVID. You shut down the world for a few weeks and you print trillions and trillions and trillions of dollars, and you're going to have massive inflation. And that's exactly what we got. Think about what Americans eat. Americans eat processed foods largely that are made by these companies, your Nestle, Kraft, Coca-Cola, Pepsi, General Mills, Kellogg's, you get the idea. And these are publicly traded companies. Their job is to make money for the shareholder. Their job is not to provide you with cheap food necessarily. So once these sort of things go up, I mean, I don't know that they can go down, especially packaged goods, that sort of thing. You're not going to see the prices go down after they go up. And these companies, admittedly, are dealing with a lot of stuff. Wages in particular have gone up drastically, and that's one thing that they're going to continue to fight. Now, of all the people that you can blame for high food prices, farmers are not to blame for high food prices. This is what I think is a very good chart. So this is your CPI food index. And then I overlaid the Bloomberg grains sub index, which is basically a gauge of corn, soybean, and wheat futures. So the gauge of corn, soybean, and wheat futures or prices has essentially been cut in half since 2022. Farmers in the United States are going to lose money this year. Farmers who grow those crops, they're going to lose money this year. The U.S. farm economy is in the midst of a full-blown recession, if you ask me. Meanwhile, the food index continues to go higher. It was record high last month. It'll be record high again when they print their next number. So farmers not to blame. With regard to sustainable food, I just think that unless the companies are mandated to do it in a certain way, the consumer has absolutely no interest in paying up in any way, shape, or form, because inflation's killing people. And I don't know if it's talked about enough. I think the biggest culprit is the money printing. When you create that much currency and that's short of a period of time, you're going to have rampant inflation. And as we have found out over the last, really since 2008, the government is now addicted to money printing, and they're not going to stop. It's going to keep going.
The 45Z tax credit is expected to be finalized by January. Ag Secretary Tom Vilsack said Tuesday that he is confident that the tax credit guidelines will be finished before President Biden leaves office. Vilsack is hopeful that the updated guidance for the 45Z tax credit will be better for U.S. producers. He anticipates that the guidance will include more crops and sustainable practices than the existing 40B credit. Very little ethanol can qualify under the existing credit due to the bundle of eco-friendly measures that farmers are required to use. The 45Z tax credit is set to take effect on January 1st.
I'm extremely skeptical of his timeline. I don't think it's going to happen. Everything that I've been told, Pete's told me 100 times that Washington is gridlocked like it's never been gridlocked, and that this sort of stuff just isn't going to happen until after January, after we've got a new president, one way or the other. But this is news, of course. The 45Z guidance, the last piece of the copy here, 45Z tax credit is set to take effect on January 1st, except we don't know what the guidelines are. So it's helpful to nobody. And to go back to what I said earlier, farmers are losing money. The farm economy is in the midst of a full-blown recession. This is the sort of thing that we really need so that we can help to boost demand, and we need the guidelines. And it's a failure of government that we don't have them right now.
So if you guys haven't checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
I did a put options for beginners video yesterday. Our subscriber base, the premium crowd, tends to trend younger. We've got a lot of farmers in their 20s and 30s that are just getting started with grain marketing. So I did a very basic introduction to put options, how to hedge physical grain using put options. And the good thing about this video, at least in my opinion, is that there's no sales pitch here. I don't care if you buy options or not. I ran through the pros and the cons, and I had a long list of cons. And then I did a list of best practices. Like, okay, this is like, here's a list of the reasons why people actually hate options. A lot of farmers hate options because they've had bad experiences. There are a few reasons for those bad experiences that I discussed that might be interesting to even the more advanced option trader. If you guys want to see that video, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. You'll get our morning email every single business day at 5 a.m. Central Time. There's a new premium video every single business day. All of my cash grain marketing recommendations are included every day. Check that deal out this morning, guys.
Hurricane Francine is expected to slam into Louisiana today. The storm was upgraded from a tropical storm to a hurricane late on Tuesday. Francine is expected to deliver winds in excess of 100 miles per hour, rainfall of up to 12 inches, and a storm surge of up to 10 feet on the Louisiana coast. Watches and warnings have been issued for the majority of coastal Louisiana, portions of coastal Texas, Mississippi, Alabama, and Florida. The hurricane is expected to deliver significant rainfall to the southern portion of the Corn Belt. Rainfall, however, is not expected to reach far enough north in order to ease falling water levels on the Mississippi River.
So I think that it's the radar this morning would indicate that it's very close to making landfall, and it's going to do so sometime today. Looks like the afternoon. The amount of rain that you're going to see in the mid-south and southeastern part of the country is pretty substantial, but the government says that it will not be enough to improve river levels. River levels at Memphis are expected to decline even further over the next week. We're sitting about 8 feet below normal this morning. We're going to be 9 feet below normal by next Wednesday if this projection is correct. The fact that we've seen these record low water levels the last 3 years is super interesting. So the lowest level you ever saw at Memphis was October 17th of last year, 12 feet below normal. Second lowest on record was 2022, 10.8 feet below normal. And then you got to go back to 1988. So I am no expert on this. If you guys are an expert on this, why are we seeing this the last 3 years? Yeah, we had some drought last year, and we had some dryish conditions in August this year, but this seems like an anomaly that we're seeing record low water levels like potentially 3 years in a row when prior to that, you got to go back to 2012 and 1988. And those years make sense. I mean, those were full-blown drought years, but you're seeing this in years that aren't full-blown drought years, which is interesting. And I don't have a great explanation for it. Oh, and this is what I wanted to mention. This is why it's so important. And I had this chart yesterday, but we ship a lot of soybeans in October and November. And if these river levels remain low, it's going to be a big problem.
The Brazilian cattle herd is expected to begin declining next year. According to consulting firm DataGrow, cattle slaughter in Brazil will drop by 4.6% in 2025 and 7.5% in 2026. Brazilian cattle producers are retaining fewer head due to domestic cattle prices falling to their lowest level since 2020. The decline coincides with the U.S. beef cow herd being at its lowest level since 1951. Beef processors have struggled with red ink this year due to a lack of cattle. The situation will likely worsen for packers with a declining herd down in Brazil. Brazil is forecast to be the largest global beef exporter this year, shipping approximately 3.3 million metric tons.
So Brazil is just following our lead essentially with this whole situation.
Yes, exactly. Cattle prices are low. Why do people want to grow their herds? You know, you're not making money. So yeah, they're going to be right behind us, it seems, from this story when it comes to their cattle herd starting to decline.
The cattle market in terms of futures has been kind of shaky here the last several weeks. We saw a big peak in what would have been late July, I believe, and then we backed off substantially. But when you take a look at the bigger picture situation, this is still looks to me to be a bull market. The bull market that began in 2020 remains intact. Now you take another $5 off this thing and maybe we look a little bit different on the charts. But for the moment, it still looks like kind of a strong market to me.
Oil prices continued to decline on Tuesday. WTI crude fell about 4% to close at $65.75 per barrel. The decline was due to OPEC Plus reducing its demand growth forecast for 2024 and 2025. China's faltering economy and growing reliance on natural gas were the primary reasons for the reduction. The decline in U.S. and European economic activity is another factor contributing to lower demand. Last week, OPEC Plus postponed a portion of its voluntary production cuts that were scheduled to begin in October. Analysts believe the decision could support oil prices in the next few months and into 2025.
I don't know. Oil prices look awfully shaky. So lowest trade since May of 2023 on a continuation basis yesterday. And if you fall below that $64 mark, somewhere in that neighborhood, it's going to look really bad. We'll check in on the Bloomberg Commodity Index, which is a measure of a basket of commodities, including energies and grains. And it's just continues to kind of leak lower here. So you've got no big picture commodity story. Like the commodity sector as a whole has no bull story right now. So if we're to see something positive happen in grains, it's going to have to be something specific to grains. It's going to have to be a drought, better demand, because it's not going to be a broad-based commodity story. What did cattle do yesterday?
Cattle futures were mixed. Live cattle were down 60 cents to 52 cents higher. Feeders were down 2 cents to 75 cents higher. Box beef was lower yesterday. Choice ended the day at 308.23. That was down 29 cents. And select ended the day at 297.01. That was down $1.48.
Dollar index is off a little bit. The S&P is down 16 points. The Dow's down 150. Bonds up a little bit. Crude is rebounding here this morning, up $1.80 in the October WTI at 67.54. We do have a USDA report tomorrow. We will discuss that tomorrow morning. Have a great day, guys. We'll talk to you on Thursday.